Thank you for joining us at xm.com for today's market comment by Harlan Bospiceros. I'm Maria Pachurdes. The U.S. dollar traded mixed against the other major currencies on Monday as U.S. markets remained closed in observance of President's Day. With last week's CPI and PPI data revealing that inflation in the U.S. was stickier than expected in January, market participants continue to raise their Fed-implied path, currently anticipating 90 basis points worth of rate cuts by December. This is only 15 basis points more than the Fed's latest projections, but it suggests that there's still room for further advances in the dollar should incoming U.S. data continue to corroborate the view that the U.S. economy is performing better than its major counterparts and that inflation is not cooling as fast as previously anticipated. Nonetheless, in the absence of any important data releases this week, investors may scrutinize the minutes of the latest FOMC decision on Wednesday, where policymakers dropped a long-standing reference to the possibility of further hikes, but pushed back against imminent rate cuts. The Kiwi was the main gainer yesterday after New Zealand's Business NZ Performance of Services Index unexpectedly climbed above the 50 zone that separates expansion from contraction, adding to the speculation that the RBNZ may not be done raising interest rates yet. Following the projection by the Australia and New Zealand Banking Group that the RBNZ could hike by another 50 basis points, investors have been pricing in a 25% probability for a quarter-point increase at next week's gathering, which may allow the commodity-linked currency to continue benefiting, but it also increases the risks of a sharp slide in the case of a disappointment. In Australia, the RBA released the minutes of its latest gathering, at which it was revealed that policymakers considered raising interest rates, but decided not to, given the balanced risks to the economic outlook. However, the Aussie was not impressed, with investors remaining unconvinced that rates could be lifted again, perhaps due to last week's disappointing employment report. Traders of the commodity-linked currencies were not excited today, even after the People's Bank of China cut its 5-year loan prime rate by 25 basis points, the most ever, in order to support the deeply troubled property sector. Chinese equity markets were not thrilled either, with China's Shanghai Composite ending its session only 0.42% up. Thanks for watching today's market comment here at xm.com.